Professional ethics is king of the chapters in our audit syllabus. It's going to come for minimum 16 marks, and if luck favors you, it may come for 20 marks also. And apart from weightage of marks, the most important thing is it is easy to score marks here. You can score full marks. So it's extremely important from exam point of view. It's also very important from practical point of view. Today, government, society, regulatory authorities, everyone expects that chartered accountant should have professional conduct, ethical conduct. So that's why it's also important. And then as you enter into practice, you need to ensure that you are doing practice as per professional ethics. Otherwise, there are very adverse consequences you will have to face. See, I know a case where two chartered accountants, they worked hard, they got their degree, and they entered into practice. And some senior chartered accountants came and they said that sign these balance sheets and reports of some of these companies, 2-3 companies, as we are not having the limit available with us. And they said okay, and they signed financial statement of these companies as per what senior said. Now, after a few years, these companies collapsed. They got bankrupt. And banks lost crores and crores of rupees of their loan money, and bank accused auditors that you didn't do proper audit. Assets appearing on financial statements were fake. They were overvalued. Liabilities were undervalued. And they sent a complaint to the CA Institute, and membership of these chartered accountants was cancelled. No longer they can call themselves chartered accountants. That is disastrous. Just imagine about it. CA degree is taken away from you after you get it. Nothing can be as bad as this. And even in practice, if you are into misconduct, if you do something wrong, unethical activity, that is called misconduct, then you may not get tenders, you may not be eligible to get empaneled, you may not get work easily. Lot of problems may arise. So it's very important to be strong in professional ethics so that you're able to practice properly and you don't face adverse consequences. Let's see, guys. We have divided this chapter in 4 parts. First part is Introduction and CA Act. Second part is first schedule to the CA Act. After schedule, after CA Act there are schedules. So there is the first schedule. Next part is second schedule to the CA Act, and then we have guidelines and miscellaneous. So let's start one by one, guys. Background. We have seen this background. And it's a fact. Eye for eye will make whole world blind. You hit me, I will hit you, we'll hit each other, we'll harm each other, we will die. If this is the attitude, world will collapse. If person says that I earn from doing fraud, other person also gets inspired, I also want to earn from fraud, whole world will become bankrupt. If this is the attitude and approach. If one CA says that I am earning loads of money by giving the fake GST invoices and earning commission on that, others also will get motivated to do that. If everyone starts doing it, there will be a big problem for the CA Institute. Government and society would they would say that we don't need CA Institute, ban them, change them, let's give their powers to someone else. So we need certain rules and regulations so that chartered accountants walk straight. And that's important, guys. You see people from India, Pakistan, Bangladesh and Asian countries, they go to Dubai. These guys, they will do all unethical activities, all criminal activities in India and these Asian countries. Moment they go to Dubai, they will walk straight. Drink and drive, 10,000 dirham fine and you're deported out of the country immediately. You do something wrong, there is police available. You do some criminal activity, there is a chop square. None of these guys will do anything wrong. So it's a fact that you need strict rules and regulation to keep people on track. So first is we are studying fundamentals of professional ethics. See, we have linked this question here, but it should be better linked with the other topic, fundamental principles. We'll study this. Now, fundamentals of professional ethics. What do you mean by ethics? Ethics are the principles which tell us what is good and what is bad. So being truthful is the good thing. You should be always truthful. You should respect others. You should fulfill your commitments. You should follow non-violence. These are ethics. So what is good and what is bad? What are professional ethics? During the course of performing practice or doing job, which things will be considered as good and which things will be considered as bad? It is called as professional ethics. Chartered accountants, it's a well defined what should be done, what should not be done. And similar professional ethics you are going to find for similar way you are going to find for doctors, company secretaries, cost accountants, and so on. So when it comes to CA, what is the source of professional ethics? That means where all these things are written. So there are 5 important sources of professional ethics. Most important being CA Act. CA Act, which is powered by Parliament, highest authority. Then below that, rules which are framed by the government of India as per requirement of CA Act. Then below that, regulations which are made by council, highest authority, council of ICA as per requirement of CA Act. And then below that we have guidelines, directions which are issued by CA Institute, but apart from requirement of CA Act. And then we have International Code of Ethics. CA Institute is member of IFAC, Indian Federation of Accountants, International Federation of Accountants. And this International Federation of Accountants has made a board, International Ethical Standard Board. That board has made International Code of Ethics, and it is mandatory for all the members to follow it. So that is also one big source of professional ethics. All these 5 are very important. They are combined and beautifully framed in a booklet called Code of Ethics. There is a booklet called Code of Ethics. There you become chartered accountant. You will get this booklet and you are supposed to do your duty as per Code of Ethics. Very beautifully explained, well defined with all examples and illustrations. That is Code of Ethics. So now we know the 5 sources and where it is written. Next is, now this Code of Ethics is divided into 3 volumes. Volume number 1 is adopted from International Code of Ethics. So it is simply copied from there. It is taken from there. It is based completely on International Code of Ethics. And it focuses on 5 fundamental principles of ethics, which we are going to study. It focuses on those principles. What are these principles? How to understanding these principles, implementing these principles, what are the challenges you will face, how to overcome those principles. It's all about fundamental principles of ethics. This first volume is all about it. It's applicable from 1st of July 2020. Then we have, and we are going to see further details about volume 1 also. Then we have volume 2. Volume 2, now CA Act, then the rules made by government, regulations and guidelines, they are all combined and explained in this volume 2. As I said, this Code of Ethics covers all the 5 sources. In volume 1, they cover International Code of Ethics. In volume 2, they cover other sources. And then we have volume 3, it's collection of the cases which were cases against the chartered accountants, how they, for what activities, for what unethical activities they were punished, under which sections and clauses they were punished. It's given in volume 3. So it divided into 3 volumes. Now, What are these five fundamental principles we're talking about? We see these five principles in essay 200 and with the name of ethical requirement. To have ethical behavior, you are supposed to follow five fundamental principles of ethics. Number one, being honest and straightforward. Integrity. Integrity. Whenever you go for audits and assignments, be truthful of what information you have. Work as per the information you get. In communication, you should be truthful. In your reporting, you should be truthful. Most important, honesty, integrity. Then for being ethical, next is whenever you get information, you should interpret it irrespective of whether the person is your relative, friend, enemy. You should be unbiased, you should be neutral when you interpret data, when you make your judgments. Then while working, there should be professional competence and due care. Your knowledge and skills should be knowledge, and you should obtain knowledge and skill. You should obtain and maintain your knowledge and skills, and you should work carefully with the help of that, with due care. While working, ensure professional behavior. You should respect law. You should respect law. You should not bring disrepute to the institute. Professional behavior. We are going to see the details later on. And you're supposed to maintain confidentiality. You get a lot of secret information, just maintain confidentiality. These are the five most important fundamental principles on which the whole code of ethics is based. And as I said, we'll see definitions, we'll see the other matters related to them. In fact, our motto which guides CA Institute, it is not based on prosperity, it is not based on growth, it is based on ethics. Ya Esha Sapteshu Jagriti, which means eternal vigilance. That means awakening when the world is asleep. What do you mean by that? Even if world is sleeping, you be alert. You should be alert. Even if world is not following ethics, you should follow it. Even if world is not thinking about society, you should. People are not thinking about society, you should think about it. Be alert even if world is not. Be ethical even if world is not. Think in public interest even if others are not. Now let's go in volume 1. Let's go in volume 1. Volume 1 is further divided into 4 parts. Part 1, 2, 3 and 4. Part 1 focus on 2 things. Number 1, it says that code of ethics is mandatory for all the chartered accountants. They use the word professional accountants because it is based on international code of ethics. So they say that it is mandatory for all chartered accountants to follow code of ethics. And then it focuses on 5 fundamental principles. What are the 5 fundamental principles? And then conceptual framework. What are the challenges you will come across while implementing these fundamental principles and how to deal with those challenges. So it's about understanding, discussion, conceptual framework of these principles. What are the problem and how to deal with them. So it broadly deals with 2 things. Making things mandatory for everyone, all the chartered accountants, whether in practice or in job, and then discussing 5 fundamental principles. Part 2 gives additional things, additional matter, additional things for those chartered accountants, those who are in service. So apart from part 1, part 2 give additional matters which should be followed by chartered accountant who are in service. Now when we say the chartered accountant in service, it will cover chartered accountants doing all the types of services, all types of employments. They can be employed full-time, part-time, or they can be employed under some contract or assignment. It doesn't, see, don't think from tax point of view where the payment will be considered as a salary or payment will be considered as a fees, what TDS will be deducted. Don't think from that point of view. If a chartered accountant is doing a job part-time, full-time, or is working under a contract or engagement, it's applicable to him. irrespective of whether executive position or non-executive position. He may be appointed in executive position doing the management work, or he may be in non-executive position working on ground level, irrespective. So it's applicable to all the chartered accountant service, whether employed or under contract, engaged in a contract for assignment, whether executive position or non-executive position. It can be highest regulatory professional bodies, or below that public sector entities, or any commercial entity, industry, service industry, or education, or NGO, doesn't matter. In fact, if we have a chartered accountant who is having COP, certificate of practice, that means he's a practicing chartered accountant, but for some time he's doing job with another CA or CA firm. If he's doing job, part 2 will get applicable. So if a COP holder is doing job, again part 2 will get applicable during that tenure to him. We are going to study this later, that yes, sometimes job is possible along with COP. Now part 3 gives additional guidance, additional matters for those chartered accountant who are in practice. So part 2 gives additional matters for those who are in service. Part 3 gives additional matters for those who are in practice. Now, chartered accountants who are in practice, most importantly, they play the real role in the society, real role when it comes to delivering services to our country and economy. So they should behave ethically. So part 3 is exclusively additional matters for those who are in practice. Apart from that, we have part 4. Again, part 4 is also for chartered accountants who are in practice. So part 3 is also for chartered accountant in practice. Part 4 is also for chartered accountants in practice. And when we talk about part 4, it gives independence standards. That means what should be independent standards, how to maintain independence. See, we study this in essay 200, that all the chartered accountants are supposed to follow fundamental principles, 5 fundamental principles. They are also called ethical requirement. But for those chartered accountants who are into audits or assurance services, they are supposed to follow these 5 fundamental principles, plus they are also supposed to be independent. They are supposed to be independent also. When it comes to assurance assignment, both the things are required. So part 4 is for chartered account in practice, and it gives independence standard, how to maintain independence in assurance assignments. In part 4, we have subpart A also and subpart B also. So when we talk about subpart A, it says that it is specifically independent standards for chartered accountants who are performing audits or reviews. We all are aware about the review. We discussed this in essay introduction. That when we go in depth, when we do in-depth checking, a lot of time is there, that is audit. When we don't do in-depth checking, we have less time, we do review. Correct? There is one more meaning to the word review. When senior checks work of junior, that's also called review. We're not discussing about that. We're discussing about the review engagement, review assignment. So if you want to maintain independence of audit or review engagement, part 4A is applicable. If you want to maintain independence in assignments other than audit or review, then in that case part B will get applicable. Now let's talk about glossary. Now glossary is simply, it's like a dictionary. It explains important terms. Correct? Now, important terms. For example, they explain that wherever audit engagement word is used, it will mean review engagement also. It will include review engagement also. So whatever requirements are there for audit are automatically applicable for review engagement. Now, one more thing. When we say that part B is for other than audit and review, that means majorly certification work. So if you're doing certification work, then independence should be maintained as per part 4 subpart B, 4B. Okay, now let's read the text. Part 1, complying with the code, fundamental principle and conceptual framework. It is a heading. Don't use it in, it is a heading. And then we have the text. So the heading simply says that part 1 is going to explain that code of ethics is mandatory, and then is going to focus on fundamental principles and its conceptual framework, which includes fundamental principles and conceptual framework and is applicable to all professional accountants. So it talks about two things: applicability and then fundamental principles. Part 2, again, things which I have in this particular thing where I have highlighted it in blue, that's a heading. Part 2, heading professional accounting service, which sets out additional matter apart from part 1, additional material that applies to professional accountant in service when performing professional activities. So governing professional activities for those who are in job. Professional accountant in service include professional accountants. All kind of all chartered accountants are covered who are under employment contract or engaged or contracted, maybe in executive or non-executive capacity. For they may be working in some commercial enterprise, industry or service sector. It can be PSU. See, we arranged it beautifully in our chart in a sequence so that it is easy to remember and retain. Or they may be working in education sector, or they may be working in NGO or regulatory or professional bodies. Part 2 is also applicable to individuals who are professional accountants in public practice. That means chartered accountant who are having COP when performing professional activities pursuant to their relationship with firm as an employee. So if anyone is having COP and doing job with another CA firm, part 2 will get applicable to them also. So basically, if a COP holder is doing job, he is in job for that tenure, part 2 will also get applicable to him. Part 3, professional accounting in public practice, which sets out additional material that applies to professional accounting in public practice when providing professional services. Okay, you should write this part 4, that heading is missing. Independent standards, which sets out additional material that applies to professional accounting public practice when providing assurance services. So those who are in practice and providing assurance services, they are supposed to follow part 4. Then we have part 4a. Part 4a, that is a subpart. It's specifically independence for audit and review engagement, which applies when performing audit or review engagement. Independence for audit and review engagement, which applies when performing audit or review engagement. So if you're performing audit or review engagement, then 4a is going to tell you how to maintain independence. Then we have part 4b, independence for assurance engagement other than audit and review. Suppose you are providing assurance, you are commenting on reliability of the information, but other than audit or review, that simply means certification work, then you have to maintain independence, which applies when performing assurance engagement that are not audit or review engagement. We have glossary, that's a definition section, which contains defined terms together with additional explanation where appropriate. Explain terms and give additional explanation, and describe terms which have specific meaning in certain parts of the code. So they may explain in general what is the meaning of the term and what will be the meaning in certain sections of the code of ethics. For example, as noted in glossary in part 4a, the term audit engagement applies equally to both audit and review. It says wherever we use audit engagement word, it includes review engagement also. The glossary also includes list of abbreviations. So it's going to explain abbreviations that are used in the code and other standards used in the code and other standards to which code refers. Then next, now see, we have very interesting thing. See, so first we had these 5 sources, they are given in code of ethics. So we are, going into one layer. One by one, we are going into a layer. So we have code of ethics, then the other layer, then below that we have volumes, volume 1 to 3. Then in volume, we have part 1 to 3 4. Now in parts, you are going to find sections and subsections. Just like in law, we have sections and subsections. Similarly, here also, in each part, you have section and subsection. Why it is there? So that it's easy to refer, remember, and quote them wherever it is required. See, if you see code of ethics, this is the index table of content of code of ethics. In part 1, you will see that is section 100, which says that code of ethics is mandatory for everyone. Section 110. So part 1, you will find all sections started from 1 only, 100, 110. Then subsections. It talks about integrity and connected matters, objectivity, professional competence and due care, confidentiality, professional behavior. Then conceptual framework, how to implement this principle, what challenges you will face, and so on. And then we have part 2 and its subsections. Okay, so parts are further divided into sections and subsections. Now, we are supposed to understand these structure of this section and subsection. Sections and subsections are further divided into 3 areas: introduction portion, requirement portion, and application portion. 3 parts. So in introduction portion, they are going to discuss background of the topic. See, every section, subsection is going to focus on topic. So they are going to discuss the background, why this topic is included, what kind of things will be in the other portion, a brief overview, background, brief overview, and sometimes it may also contain explanation of important terms. So some definitions may be included in the introduction portion. So we have an introduction portion. After introduction portion, then next we have requirement. This requirement section, the most important requirement section, explains what will be responsibility or what will be obligation of the chartered accountant. What will be the general obligation, what things they need to follow in general whenever they perform any kind of work. So there can be general obligations like these 5 fundamental principles you need to follow every time, everywhere. So these are general obligations. Then they may have specific obligation, what you're supposed to do if there's a non-compliance of law, what you're supposed to do if you resign. So there will be specific guidance, specific obligations also. So in requirement, you may find in general obligations and you may also find specific obligations. Then we have application portion. Now what is this application portion? See, application portion is going to explain how to fulfill your responsibilities, obligations. So it's going to give you factors, it's going to give you guidance, illustrations, how to implement, how to perform your obligations and responsibilities. So it's going to be a supporting area. In fact, in standards on auditing, you are going to find similar kind of structure. There will be introduction portion, there will be requirement portion, and there will be application portion. Correct. Similar. Let's read. The code contains sections. So code of ethics contains sections which address specific topics. For specific topics, some section contains subsections. There will be subsections dealing with specific aspects of those topics. So for different topics, we have different sections, and then we have subsections also. Each section of code is structured where appropriate as follows. So there is an introduction portion. Introduction portion sets out subject matter addressed within the section and introduces the requirement it explains the background of the subject matter topic which is covered in that section, addresses within section and introduces, and also gives brief overview about the requirement and application section, requirement and application part in context of conceptual framework. Introductory material contains information including explanation of terms which is important to the understanding and application of each part and its section. So as discussed earlier, it's going to have the background, it's going to have overview of what will be there in other section and important terms also. Then we have requirement. It establishes general obligations while performing any assignment, specific obligation with respect to particular situation with respect to subject matter addressed. Application material. It provides context. It provides context, explanations, suggestions, how to take actions, illustrations, and other guidance to assist in compliance with the requirement. Now, when we talk about part 1, now we are going further in further detail. Now we are going to sections. See, we are opening layer by layer, correct? So it's like rows. See, if you carefully observe rows, you'll find layers of the petals. So there will be first layer, then the next. So those who are madly in love, they must be aware about the roses. They must have bought a lot of roses during Valentine's Day and so on. So here also on the same lines we have concepts. So now we are going further detail. In part we are going in section. Section 100 simply says that it is mandatory for all the chartered accountants to follow code of ethics. Then they give further explanation. Sometimes law may say that part of the section is not applicable to some chartered accountants, some professional accountants. In that case, that particular portion will not be applicable. That means they're saying law will override code of ethics. That's absolutely fine. Code of ethics is made by CA Institute, and law is made by the Parliament. So sometimes law may say that part of the code of ethics may not be applicable to some chartered accountants, that will prevail, but other portions and sections of code of ethics will still get applicable. Only that particular part or particular some section will not get applicable. Then 110 explains fundamental principles. We already know that. We 5 fundamental principles. Now this question 780 is relevant here, so we have put it there. See, CA Institute asked question in November 16 exams. Question asked 2 things. What are fundamental principles of code of ethics? And then what are the threats involved? They asked 2 things. But if you see the answer, they simply explain 5 fundamental principles. And they explain all the 5 fundamental principles one by one. We are going to study details of each fundamental principle. Okay, we are going to study details also. But Institute failed to explain threats. So their Institute's answer went wrong. See guys, don't worry. Even they are human beings, they are bound to do mistakes. So whenever they make a mistake, we should know this is the mistake. So along with fundamental principles, they were supposed to explain threats, but they missed it completely. We have given that in our author's note. See, if Institute has done something wrong, you should understand and you should do the right thing. You should remember the right thing, because Institute is going to rectify its mistake. They are going to rectify. They are going to come on right track. So you should always go with the right track. We are going to study about these fundamental principles and threats in detail. Okay, so this was the question and there was a small controversy in that question. Now, what further section 110 says? It says that it is responsibility of each and every chartered accountant to understand these five fundamental principles and implement them while performing practice or while doing job. It's mandatory for each and every one. And they explain very interesting thing. They say that sometimes there can be conflict. Generally, these five fundamental principles are framed in such a manner that when you follow one principle, it becomes easy to follow the other principle. They complement each other. They complement each other. That's how they have been framed. But sometimes they go against each other, especially confidentiality. Now, integrity, we are supposed to be truthful. We should always say the true things. And then we, at the same time, we have confidentiality with us. We have confidentiality with us. These two principles may go against each other. It is very much possible. They may contradict each other. We will be puzzled whether we should go with the truthfulness or whether we should go with confidentiality. Then professional behavior says that you should respect law. You should respect law. Again, there can be conflict whether to go with the law or whether to protect confidentiality. Again, there can be conflict. Correct. So principles, it is possible that principles contradict with each other. Now, what should be done in such case? If principles contradict, if there conflict there, if there's a conflict while applying principles, then fourth, most important, number one, discussion should be done. You should discuss these things with whom? You should go to your other colleagues. If you're working, if you're practicing, go to other colleagues in the firm. If you're in job, again go to other employees in the organization. You consult with them. They say that whenever such things happen, you should go and discuss and consult. Then above that, you can go to lawyers. You can go to lawyers within the organization, outside organization, or bigger than that, you can go to TCWG, those charged with governance. Or bigger than that, you can go to ICAI, Institute of Chartered Accounts of India. So if such conflict happen, you should go and talk to people and understand things better. But then, if you took consultation, that means your responsibility is over. That's not the case. After consultation, understanding the issue, you are supposed to make professional judgment what should be done in this tricky situation. There can be tricky situation. What should be done in the tricky situation? And if you're not able to get the correct answer, if you're not able to implement both the principles, you may think about disassociating from the matter, resigning from the assignment. Even that is possible. So what if there is a conflict? How to deal with the conflict? First step is discussion. Second step is making judgment. If that's not possible properly, disassociate, leave, resign. And it should be documented. What was the issue? What was the discussion? How decision was made, and what was the rationale? These things should be documented. Now let's talk about integrity. We know integrity means honesty. Correct. So whenever you go for doing your work, whether it's a practice or job, you should be honest and straightforward. You should work as per what information you have obtained. You should be truthful. Your communication should be truthful. Your reporting should be truthful. So you are supposed to perform your practice or job as per integrity, truthfulness, and being straightforward. Now, very interesting, what you are not supposed to do. That's extremely important. During the course of practice or job, you may come across situation that a teamwork is going on. You are associated with a team which is preparing some financial statements or reports, or below that some returns or communications or other information. They are preparing them. You are part of the team, and you come to know that information in these documents is false, misleading. It is false or misleading, or or it Wrong information can be there. You know that the wrong information is there in these reports, or very important information is omitted or obscured, written in such a manner that it's very difficult to read, which is making it misleading. So if you're associated with few things which are false, misleading, or there are omissions or negligence, three things, then you should be careful. Being straightforward is one thing, and now you're associated with few things and you know that there are problems with the integrity, honesty, truthfulness. You have two options. Either ensure that if it's possible for you, report will consist modification. Your report should clearly tell that these informations are not truthful, they are not correct. You should clearly modify your report and explain what is the problem with the documents. Or second, if that's not possible, that's not in your hand, you should disassociate yourself. So they are saying either put in the report or you disassociate yourself. You have two options. So whenever false, misleading, if you're part of any team, you have to be careful. A professional accountant shall comply with principle of integrity, yes, which requires an accountant to be straightforward, honest in all professional business relationships. Integrity implies fair dealing and truthfulness. Definitely. A professional accountant should be honest, straightforward, truthful in all his conduct. A professional accountant shall not knowingly be associated with reports, returns, communication, other information where the accountant believes that the information. He should stay away from the work, from the reports, returns where contains some materially false or misleading statements. False, misleading statements are there. Contain statements or information provided. These information is prepared negligently, omits or obscures, difficult to read, required information where such omission or obscurity would be misleading. So we have covered in again beautiful sequence. If these things are there, stay away. Either you report it or you get disassociated. However, a professional accountant will not be considered to be breach in matters mentioned of paragraph 2 if the professional account provides modified report. If you provide modified report, you will not be guilty of professional misconduct. If you put in the report, when a professional accountant becomes aware of having associated with information described in paragraph 2, the accountant shall take steps to be dissociated from the information. Either you report it or you get yourself disassociated. Now, whenever you get information, you have to interpret it, you have to make your judgments on continuous basis throughout the audit. Whenever you get information, we have to make judgment. You should ensure that you should be objective. That means you should be unbiased. So while accepting assignment, you should carefully think. You should carefully think whether there will be circumstances pressurizing you to change your professional judgments. Suppose a lot of relatives are there in the company, a lot of relatives are there in the company as shareholder, as director. It may pressurize you to change your professional judgment. Correct? So you should be careful. Don't accept the assignments which are going to put you under pressure. Don't accept such assignments. After accepting, ensure that your objective, it includes three things. Three things. Number one, don't come under pressure. Being objective means unbiased. Don't come under any pressure, undue influence of others. Don't come under pressure. Next, don't just work for personal benefit. See, there's a very personal benefit. A chartered accountant is doing audit. Fees is pending for few years. Suppose fees comes out to be 2 crore rupees. Now the situation is, if he gives clean report, entity will get loan from the bank and his fees will get repaid. He will recover his fees. But if he gives a correct report, proper report, then they will not get the loan and they will not get the fees. It's a tricky situation. You should always be careful. Don't put personal benefit ahead of professional importance, professionally important matters. So if there's a conflict of interest, manage it carefully. Being objective means not coming under pressure. That means not working for only personal benefit. And third, being unbiased. That means not having very strong opinions, strong feeling, emotion, opinion. You may have about people, like if you say Pakistan. So you may feel that every person who comes from Pakistan is a terrorist. See, I am not in favor of Pakistan. I don't like. I'm just giving an example. You may think he's a terrorist. And that's called being prejudgmental. That's called bias. So being objective, think about objectivity when you are accepting assignment. Think about objectivity. You are performing assignment. Keep in mind three things. No undue. Don't come under pressure. Don't work for only personal benefit, and be free from bias. Correct? Now, a professional accountant shall comply with the principle of objectivity, which requires accountant not to compromise professional business judgment because of don't come under pressure, don't just go for personal benefit, conflict of interest, don't go for bias. Just stay away from it. Being objective means ensuring that three things are not affecting the professional judgment. A professional accountant shall not undertake professional activity if a circumstance or relationship undue influences accountant's professional judgment regarding. So you should keep this thing in mind when you are accepting the assignment and when you are performing the assignment. In both the cases. Now, professional competence. What do you mean by professional competence? See, we are studying some of the theory portion. So this theory is there. It may sound little boring, but that's fine because it's important. All these questions can be there in MCQ also and in descriptive also. Correct? But anyways, we have to go through that, understand it and retain it. Now, see, first you remember broad things, broad meanings, then automatically you will be able to remember specific things. So focus on broad things first. Broadly what it wants to say, that will be real beneficial. Competence means knowledge and skills. Knowledge and skills, that is competence. And using that knowledge and skills, you have to work carefully. So competence, see, when we say that we are performing quality work, we study this in Essay 220 and SQC 1. If the whole work of the assignment is systematically planned and designed as per law, rules, regulations and standards which are applicable, properly designed as per that, and the end report is also prepared as per law, rules and is appropriate, is reliable. When these two things are there, work is done systematically, end report is reliable, we say that it's a quality work. So what they're saying, as a chartered accountant, you should attain and maintain professional competence and use it carefully with due care to ensure that work is performed as per law, rules, regulations and technical and professional standards. What do you mean by competence? What they say about competence? You should attain and maintain professional knowledge and skills which are required for assurance engagement as such, normal engagement. Attain and maintain that. After attaining and maintaining, on continuous basis, be aware what changes are happening around you, whether new act is coming, new business practice are there, new system is coming up. Just be aware, understand what changes are happening around you. Then should undergo continuous professional development. So one thing is that you should be aware what changes are happening. Now, once you know the changes, you should develop yourself. Suppose there's any amendment, you can go for seminars, training, courses to maintain your professional competence. Apart from yourself, you should take reasonable steps to ensure that people who are working under you, they also attain and maintain professional competence. You should be aware about yourself and you should be aware about others who are working with you. Working with due care, diligently. Due care, diligently, that means doing the whole work thoroughly, doing everything thoroughly, carefully and on timely basis. Thoroughly, carefully on timely basis. And Chartered accountant should apply sound judgments specifically. Working carefully, it includes a very important thing that when you make professional judgment, you should be careful. You should do it carefully. That's due care. Now, irrespective of, you may be having a lot of competence. You may be having competence. You may be working carefully. You are doing good, but still you should always explain client. But you should always explain client that there are inherent limitations. Even when you are very competent, even when you are working carefully, there may be situation where things may go wrong. Always explain what are the inherent limitations. Now, a professional accountant shall comply with principle of professional competence. It's very important. If people don't do this, they will become outdated, irrelevant, and they will do poor quality work. A professional accountant shall comply with principle of professional competence and due care. Attain and maintain professional knowledge. Attain, get it, and then maintain professional knowledge and skill at level required to ensure that client or employing organization receives competent professional service based on current technical and professional standards and relevant legislation. Ensure that you have enough competence, attain and maintain competence so that you can work with present law, rules, regulations, technical and professional standards. Act diligently accordance with applicable technical professional standards. So first be competent and then use it and work diligently. Serving clients and employing organization with professional competence require excess of sound judgment. Again, a lot of judgments are involved, so you should be unbiased when you make judgments, and when you make judgments, use professional competence. Requires excess sound judgment, applying professional knowledge and skill when undertaking professional activity. Maintain professional competence, require continuing awareness what changes are happening and understanding of relevant technical, professional, business developments. Continuing professional development. Continuing professional development enables professional accountant to develop and maintain the capabilities to perform competently within the professional environment. Continuing professional development. So ensure that you are competent and your people who are working under you, even they are competent. You need to ensure both the things. Diligence encompasses responsibility to act in accordance with requirements of assignment. You should cover everything thoroughly, carefully, and timely. That's called diligence. In complying with principle of professional competence due care, a professional accountant shall take reasonable steps, ensure those working in professional capacity under accountant's authority. So those who are working under the authority of the chartered accountant, their competence and they should be their competence is also important. Ensure they're competent and you should supervise that they are working diligently. Where appropriate, professional accountant shall make clients, the employing organization or other users of the accountant says professional service or activities aware of limitation. You may be very good, but just don't be overconfident. Explain people what are the limitations involved. Now, confidentiality is very, very important issue. See, there's a fiduciary relationship between client and chartered accountant. It's very important for chartered fiduciary. It's a relationship of trust. Chartered accountant comes across a lot of secret information, comes across lot of secret information of the client. and he is supposed to ensure confidentiality. If across society chart account will maintain this confidentiality, people will trust them more and free flow of the information will happen. And if they don't do it, people will lose the trust and they will stop taking services from chartered accountants. That's a very important part. So confidentiality is very important, it's required. Now they further explain situations in which you are supposed to maintain confidentiality. Again, we have, see, if you observe our charts and teaching, you'll always find some kind of flow which makes remembering things extremely easy. So now we have examples where we are supposed to maintain confidentiality. So you have a meeting with prospective client or prospective employer. Your prospective, they can become your client or become your employer. During this meeting, you may come across a lot of confidential information. You are supposed to maintain confidentiality even if that person is not yet your client or not yet your employer. You are supposed to maintain confidentiality of prospective people also. Suppose you get the work, you go to office and you party. In office also you are supposed to maintain confidentiality. Don't give secret information to each and everyone within the firm. No, not at all. Confidential information should be given to only limited number of people where it is required. Maintain confidentiality within office also. Then you go home. Even when you go home, you talk to your relatives or friends or close associates in social environment. Maintain confidentiality. Don't give secret information even to your relatives, friends, and your close business associate. No, not at all. Then you are working, you are having team meeting. In team meeting, explain people that each and everyone is supposed to maintain confidentiality. Explain them, give them the importance. What can be consequences if they breach confidentiality? What kind of penalties and punishments will be there? Then while working, you get a call from broker. Never use confidential information for its own advantage or advantage of any third party. Don't do insider trading. Now the assignment is over, last day at the client. Even when the assignment is over, you have left the client, you are supposed to maintain confidentiality. Still you are supposed to maintain confidentiality. So these are the 6 instances. They are giving examples that at these 6 places you are supposed to maintain confidentiality. Then comes exception. Exception. We can breach principle of confidentiality in 3 circumstances. If it is required by law, if law says that just forget about confidentiality and go and give this information. Example, we have section 143 subsection 12, fraud reporting. Fraud reporting, irrespective of confidentiality, we are supposed to give information about the fraud to central government. Then if it is authorized by client, if client himself is saying that just go and give this information, we can definitely give it. Unless it is prohibited in any other law for privacy related matters, etc. If authorized by client, give information. Or it is third one, professional duty or right. To make reports and certificates is professional duty. So while performing that duty, whatever information you have to give, you have to give. Don't think about confidentiality. Suppose some investigation is going on and you have to defend yourself. Again, you can give confidential information. Correct? Don't think about confidentiality. It is your right. So sometimes it is your duty, sometimes it is your right. So there are 3 exceptions required by law, authorized by client, and sometimes there is a duty or right also. Now there is further explanation of the point. Required by law. Sometimes there can be law which says that during proceedings, that means during legal cases, auditors are supposed to give this information. There can be law which says that if there is a non-compliance of law, infringement of law, auditors are supposed to give this information. There can be such laws. Internationally, there may be such laws. In India, as on today, there are no such laws. There's only fraud reporting. There is no law which says that uh, auditor supposed to report during the legal cases, or auditor supposed to report wherever there is an infringement of law. No, as on today, it's not there. So it's just an example. If it is authorized, further, if it is authorized by client, if client authorizes, go and give information, and if it is not prohibited under any other law, generally it is not, you can go and inform. Duties, you can break confidentiality for rights and duties. See, there is a shortcut, reels. Suppose review is going on. We study this in review, peer review chapter. If review is going on, someone is checking your work, you can explain people, you can defend yourself by giving confidential information, no problem. Suppose inquiry or investigation is going on, again you can defend yourself. Again you can defend yourself by giving information. Suppose legal proceedings are going on, again you have right, you can defend yourself. You can defend yourself by giving confidential. It's your right. Suppose you are making reports and certificate as per technical and professional standards, you have to follow those standards and give information in reports and certificates. It is your duty. It is your duty. So these are confidentiality, there are examples, there are exceptions. Whether to give confidential information, not, and how to give this information. And how to give this information, there's important thing you need to keep in mind, and that is hats. H, you should always think, is it harmful for the client or any other third party? How harmful it is going to be for the client, employing organization and third party. Always assess what level of damage can happen because of breach of confidentiality. A stand for address. Always think about it, to whom this information, addressed to appropriate recipient, and further ensure that appropriate recipient is selected. You should always, whenever you give information, it should be addressed. It should be, information should be framed in such a manner, it should be for proper person, and you should select the person carefully. So communication should be properly planned, and proper person should be selected, to whom it should be addressed and how it should be addressed. Whether central government, ministry, or state government, or CBI, enforcement directorate, you should carefully how it should be communicated and to whom it should be communicated. Type of communication. So if a letter is sent, many people may have access. Same with the email. But if you go in person and explain, only one person will have access and give hand delivery. Type of communication will be important. Whatever information you giving, it should be known to you, and you should be confident that this information is correct. It should be substantiated by you to the extent possible. Whenever you change client, when you go from one client to another, or go from one job to another, it is absolutely fine if you use skills and knowledge which are achieved in the previous assignment. Absolutely fine. But you can never give confidential information of the past clients or employer to the new ones. That's not allowed. A professional accountant shall comply with principle of confidentiality, definitely, which require an accountant to respect the confidentiality of information acquired as a result of professional employment relations. See, they use this phrase again and again. You should maintain confidentiality with respect to information you have obtained by your professional or business relationships. If it is repeating again and again, you may mark it, you may remember it. See, writing word to word complete text is not possible. First comes understanding, broad understanding, specific understanding. Then comes retention. Then comes retention through memory techniques. then comes revisions, and then writing practice. Correct? So this is a step-by-step approach. And when you write, you cannot write as it is. You need to remember the broad points, and you have to have own language to express things. That is how it is possible. If you try to remember sentence by sentence, it will be extremely bad. There will be a lot of suffering. Don't do that. Never do that. Be alert to the possibility of inadvertent disclosure, including social environment and particularly to close business associate or an immediate or close family member. So be careful. Don't spill the information inadvertently, means by mistake, unknowingly. By mistake, unknowingly giving information. Maintain confidentiality of information within the firm. Within the firm, it should be given only to those people who need it, or employing organization. Maintain confidentiality of information disclosed by prospective client or employing organization. Maintain confidentiality by prospective client or employing organization. Prospective client. So if these guys, they give information, you should maintain confidentiality. Prospective clients and employing organization. Not disclose confidential information acquired as a result of professional and employment relationship outside the firm or employment without proper specific authority unless there is legal or professional duty or it. These are exceptions. They are explaining 3 types of exceptions, which they are discussing further in detail later. Not use confidential information. See, in charts, we have beautifully covered everything you need to express in your own words. Not use confidential information acquired as a result of professional and employment relationship for the personal advantage of the accountant or for the advantage of third party. Not use confidential information acquired as a result of professional and employment relationship don't use this information for personal advantage of accountant or for advantage of third party. Don't do insider trading. Not use or disclose any confidential information either acquired or received as a result of professional or employment relationship after relationship has ended. Even when the relationship is over, maintain confidentiality. Take reasonable steps to ensure the personnel employee under the accountant's control and individual from whom advice and assistance are obtained respect the accountant's duty of confidentiality. Duty of confidentiality. Explain the whole team to maintain confidentiality. Confidentiality serves public interest because it facilitates free flow of information. It's very important. If people believe that you maintain confidentiality, they will free flow of information from professional accountant, client or employing organization to accountant in knowledge that the information that will not be disclosed to third party. So if you maintain confidentiality, people will show faith on you. Nevertheless, the following are circumstances where professional accountants are or might be required to disclose confidential information, or when such disclosure might be appropriate. So these are exceptions, whether it is required by law, production of documents or other provision of evidence in the course of legal proceedings. So these are example, may be required by law during legal proceedings, disclosure to appropriate public authority of infringement. If there is a non-compliance of law, you may be, but in India, there are no such laws as on today. Disclosure is permitted by law and authorized by client. Once it is authorized by client, generally you give it to the concerned person unless it is prohibited. Again, in India, there are no such laws which prohibits. Sometimes they prohibit, when it comes to confidentiality, privacy of the customers, banking customers, patients, medical patients. There is a professional duty or right to disclose when not prohibited by law. This is one more exception. You have to breach confidentiality to comply with sometimes required to comply with requirement of peer review or quality review of the institute. To respond to an inquiry or investigation by a professional or regulatory body. So if the inquiry or investigation is going on, to protect the professional interest of a professional accountant in legal proceedings to protect himself in legal proceedings or to comply technical and professional standards. In deciding whether to disclose confidential information, professional accountant should consider the following points. If you are planning to disclose, you should consider these points: whether the interest of any party, including third parties whose interest might be affected, could be harmed. Whether interest of any party, including third parties whose interest might be affected, could be, what kind of harm can happen to others if the client or employing organization consents to disclosure of information by professional accountant. What kind of harm can happen? Whether all the relevant information is known and substantiated, whether the information which you are giving is checked, rechecked, it is correct, known, substantiated to the extent possible. The proposed type of communication and whom it is addressed, how it should be addressed and to whom it should be addressed, whether parties to whom communication address are appropriate recipients. So selecting carefully how the thing will be drafted, for whom it should be drafted, to whom it should be given. A professional accountant shall continue to comply with principal confidentiality even after the end of the relationship between the accountant and the client or employing organization. When changing employment or acquiring new client, the accountant is entitled to use prior experience. You can go for prior experience, but shall not use or disclose any confidential information acquired or received as a result of professional or employment relationship. Never breach confidentiality, even for chartered accountants who are in service. Professional behavior. Professional behavior include two things. You should are supposed to. Professional behavior means respecting law. Respecting law, rules and regulation. Point number one. Law, rules and regulation, and not to do anything which bring disrepute, discredit or discredit to the profession. Keep in mind two things. So they are giving examples that you have to maintain professional behavior. So example, don't accept any assignment which bring disrepute to the institute, their integrity, their objectivity. For example, don't take work of terrorists. Don't work for terrorists. Don't work for smugglers. Correct. It will bring bad name to us if we are doing such things. Don't do any after. So while taking work, you should be careful. After taking work, you should be careful. Don't do anything where people may think, where third party would likely to conclude that you have damaged credibility of the institute. So while accepting, be careful. Don't accept any work which will damage credibility, disrepute, and while working also be careful. Now there is one test we'll discuss about this later. So whenever in doubt whether you are following fundamental principles or not, you should always think from the point of view of reasonable and informed third party. It's called third party test. We are going to study about this later. RITPT. You should always think, if the same level of information is given to a reasonable and informed third party, whether their conclusions are going to be same as my conclusion. So if you're in doubt whether it will bring disrepute, think about it. If this information is given to third party, whether they will think that it is whether they will think it is a discredit to the institute, wrong name to the institute. That's called third party test. We'll discuss about it later also. Most important now, promoting yourself. When you are promoting yourself, that time you should be extraordinarily careful. Especially that time professional behavior is required. You should be honest and truthful. Don't do anything. Don't make exaggerated claims. Don't make exaggerated claims about yourself, about your services or your experience. Don't make exaggerations. Don't just hype it unreasonably. Don't make disparaging, insulting comments about other chartered accountants and unsubstantiated comparison with other chartered accountants. Don't insult others. Professional behavior includes promoting ethically. Promoting ethically. Don't make exaggerated claims. Don't insult others. Don't insult others. Don't go against the guide. When you are promoting yourself, don't breach advertisement guidelines. If there is a doubt, there is always a third party test. And if you're not able to do that, you can go and talk to ethical standard board. If you're in doubt, go and talk to them and confirm whether you are ethical or not. So professional behavior, two things, and be extra careful when you promote yourself. Let's read. A professional accountant shall comply with principle of professional behavior. Comply with principle of professional behavior, which require accountant to comply with relevant laws and regulations. So respect law, rules, regulation. Avoid any conduct that accountant knows or should know might discredit the profession. Respect law, rules, regulation, and don't bring disrepute. Whether a particular conduct is disrepute or not, you can apply third party test. Conduct that might discredit the profession includes conduct that a reasonable and informed third party would likely to conclude adversely affect the good reputation. You can apply third party test. If third party is going to conclude it is a disreputation, you should stay away from such things. So if in doubt, apply third party test. And as I said, we are going to discuss it about it later. A professional accountant shall not knowingly engage in employment, occupation, or activity that impairs. So while accepting work, be careful, or might impair the integrity, objectivity, good reputation of the profession, and as a result would be incompatible with fundamental principles. When promoting himself and his work, a professional accountant shall not bring profession into disrepute. A professional accountant is required to conduct his affairs in manner that he remains outside the boundaries of profession and other misconduct. Misconduct means unethical activity. A professional accountant shall be honest and truthful and should not make exaggerated claims. He should not make exaggerated claims for the services they are able to offer, the qualifications they possess, or experience they have gained. Don't make exaggerated claims. Disparaging reference or unsubstantiated comparison to the work of others. Don't make wrong insult others and make wrong comparisons. Any direct, indirect measure to advertise any profession, other facts which are violation. Don't break advertisement guidelines issued by counsel of the institute from time to time. The professional accountant should ensure that content of advertisements are true to the best of the knowledge and belief and are in conformity with advertisement guidelines, and be aware of the institute, be aware that the institute does not own. See, whatever advertisement you make, if you do something wrong, you will be responsible. Institute will never be responsible. If a doctor does something wrong, whether we will make All India Institute of Medical Sciences responsible for that? No. CA Institute is not going to take any responsibility whatsoever of any advertisement, any communication you make. But apart from whatsoever, for such content claimed by him. However, if a professional accountant is in doubt whether his activity will be professional behavior or not, advertising appropriate or not, the accountant is encouraged to consult Ethical Standard Board of ICA. See, let's see the gist of what we have seen till now. You can pause video and you can write it. See, broad understanding and knowledge is important. What we have seen 5 sources. We have seen 5 sources of professional ethics. Then we have seen that it is beautifully drafted into Code of Ethics where there are 3 volumes, volume 1, 2 and 3. Then we have seen that in volume 1 there are 4 parts. Part 1, 2, 3, 4. 1 for everyone, 2 for service, 3 for those who are in practice, 4 again for practice. Then we have seen 5 principles. In integrity, we have seen we have seen that you should be honest and you should be careful if you are associated with any reports or returns which are false, misleading, omissions which are falsified, misleading. You should take proper steps. So two things they explain. Then, so that is a special one. If you're associated with something wrong, be careful. Objectivity, they explain, while accepting, you should ensure that your judgments are not getting affected. And then while working also, you should check you are not getting affected. Professional competence and due care. You should attain and maintain professional competence and then also work diligently. Confidential behavior. Confidential behavior, we have seen examples, exceptions. Professional behavior, ensure professional behavior while accepting and while performing work both. And then the special thing was when you promote yourself. We have seen this much. So now guys, we have seen introductory part. We have seen 5 fundamental principles. Now we have to see the conceptual part. What are the issues, matters which can arise when we go and implement these 5 fundamental principles? How to tackle these issues? How to address these issues? Let's see. So, the first thing is threats. Situations or circumstances which put pressure on chartered accountants to do wrong things, to give wrong report, they are called as threats. So, for example, if we talk about threats, suppose brother of chartered accountant is sitting as a managing director. Now it will be very difficult for him to go against his brother. This situation will put pressure on the chartered accountant to give wrong report. So that is a threat. See, now here we are doing conceptual discussion as per code of ethics. Don't apply Companies Act. Don't apply disqualification of Companies Act. See, if question is as per Companies Act, then answer it as per Companies Act. If it is as per code of ethics, then use discussion of code of ethics. So try to segregate things. They will always specify how to, from what point of view answer should be given. Okay. Now, so 3 things we have to see when we are in audit and when we are doing job. We have to identify threats. Threats, that means issues, circumstances which will put pressure on us to do wrong things. We need to evaluate the threat. How big is the threat? Is it acceptable? Can we continue with the threat? And then how to address, how to deal with, how to manage the threat. So now we know fundamental principles. So these threats are the issues, matters which may arise in practical life. Identify these threats, evaluate these threats, and address these threats. We are going to see all the 3 things in detail one by one. So now we need to understand what are the different types of threats involved. That means negative circumstances which are involved. So there are 5 types of threats. Shortcut is I am fair. I stand for interest. I stand for interest. Self-interest threat. Suppose circumstances or situation is such that financial interest, financial benefit of chartered accountant is connected with the client, or other benefit like status, his personal likings, dislikings. These benefits are connected with the client. To protect these interests, he will be under pressure to give wrong report. When the circumstances are such that his financial interest or other interest, these benefits are associated with the client, and to protect these benefits, to get these benefits, he may be under pressure to give wrong reports. Such threats are called self-interest threat. For example, if chartered accountant is having investment in a company, that means his financial interest is in the company. He will be under pressure to give clean report, to give wrong report, so that his financial benefit is protected. Such situation, such circumstances will be called as self-interest threat. Then next is F for familiarity threat. Now what is this threat? When the circumstances are such that close relatives, relatives, friends of the team members are sitting in the organization of the client, sitting in the client company as directors, officers, or employees. Now it will be very difficult for auditor to go against them. This will put pressure on the auditor to give wrong report. That is called familiarity threat. So if there are close relationship with the client or its companies, it will create familiarity threat. Or there is a long association, we are doing audit for 25 to 30, 40, 50 years. There will be so close relationships with the client that it will be difficult to give report against them. It's very normal in Indian circumstances. You will find that grandfather used to do the same audit, his son used to do the same audit, grandson is doing the same audit, and now the relationships are so close, correct? Managers are happening between these two families, auditors and the promoters or directors. Such situation is there. You go around and see every CA firm is famous for some particular group. There are so close relationship. These close relationship create familiarity threat. It will be difficult for auditor to give honest reports, proper reports. That is familiarity threat. Then advocacy threat. If auditor is performing two assignments at one point of time, at a particular point he is doing audit, and at the same time he is helping company to go for IPO, FPO and get more and more money by valuing shares. So he is doing audit, at the same time he is promoting shares of the company. He is doing audit, at the same time he is fighting litigations on behalf of the company. He is doing audit, at the same time he is lobbying. Lobbying that means lobbying for the company. Lobbying means going to politicians, political parties and convincing them, explaining them why particular law should be brought, why particular thing should be done. That's called lobbying. So at one point of time he is doing audit, at the same he is doing these other assignments. It will create conflict, because in audit you are supposed to report negative things, and in other assignments you are protecting the client. So these two assignments will conflict each other, and it will create pressure on the chartered accountant to give wrong reports. That is called advocacy threat. So you are doing audit of the you are doing audit of the entity where you are when you are promoting their shares, fighting litigations for them or lobbying for them. We are going to see example of each and every threat. Intimidation threat. If the circumstances are such that auditor is threatened, he will be removed, he will be replaced, there will be litigation against him. If such threat, if he is threatened in such a manner, client is trying to frighten the auditor, if that is happening, then that is intimidation threat. In this pressure, some auditors may give wrong reports. Intimidation threat. Self-review threat. When the situation is such that auditor is supposed to check his own work, that is called self-review threat. He only designed internal control system, now he is only auditing. That means indirectly he is checking his own systems. Self-review threat. He only prepared basic accounting data, he only prepared fixed asset register, now he is only supposed to audit it. Self-review threat. He only prepared books of accounts, he is supposed to audit. Self-review threat. When circumstances are such that he is supposed to check his own work, his own judgments, that is called as self-review threats. So guys, there are 5 kind of threats. We have discussed an overview of each type of threat. Now let's go and see exact examples. Now, exact examples. So let's talk about self-interested. When the circumstances are such that financial or other interest of the auditor are associated with the client, it will put pressure on him to give wrong reports. See, we have changed the chart little bit. Those 2 arrows, we have cancelled those 2 arrows, financial interest and other interest, and we have created a mnemonic, BP Limited. So self-interest threat is increasing BP of the auditor. BP Limited. B stand for, if auditor or his family is having close business relationship with the client, then to protect this relationship, he may go for a wrong report. Self-interest threat. P stand for personal gain. There can be a situation where auditor likes, he has liking for a particular type of business, he likes particular type of research, or he is having keen interest on financial data of the company, because with the help of that he is able to predict economy, or he is able to manage his funds. There may be a situation where auditor is having keen interest in information, data, or knowledge of the client, which gives him personal satisfaction or personal gain. To protect this personal satisfaction, personal gain, he may give wrong report. Again, that is self-interest threat. B stand for to protect business, close business relationship, to protect his personal gain, his personal satisfaction. P again stand for, he knows that if he gives clean report, he will become future CFO of the company. There is a potential employment in the company. To protect his opportunity of potential employment, he may go for wrong report. L stand for losing client. Losing client, there can be circumstances. There can be circumstances. There can be circumstances where already relationship with the client is on the rocks. It's not going good. He on the rock, things are not going good. Client is planning to remove the auditor. Now in these circumstances, to avoid losing client, he may go for wrong reporting. He may go for pleasing the client. If the circumstances are such that he is going to lose the client, he is getting removed, then to protect him, he may go for wrong reporting. That is again self-interest threat. Then T stand for amount of fees which he earns. Amount of fees which he earns from the client is huge. It's a very big portion of the total fees. To protect his total fees, big percentage, he may again go for giving wrong report, self-interest threat. D stand for he may have direct equity investment, debt investment, or he might have given loan. To protect that equity investment, debt investment, loan, he may go for wrong report, self-interest threat. To protect business relationships, to protect personal gain and benefit he gets from the information of the client, to protect potential employment, to protect loss of client, to protect total fees, to protect direct financial interest. These are the examples which create pressure on the chartered accountant to give wrong report. These are self-interest threats. Then examples of familiarity threat. Now what is that familiarity threat? Suppose there are close relatives of the team members are sitting as director in the company. are sitting as director in the company. How I will go against the is how I will go against the directors. How I will go against the director. My relatives are sitting against my relative are sitting as directors. My relatives are sitting as officer in the company. My relatives are sitting as employee. That employee which is closely involved in preparation of financial statement, he has a significant influence on preparation of financial statement. They call it subject matter. So if relatives of the team members are sitting as directors or officers or employee who is involved in preparing financial statement, such big positions, it is going to create pressure on the chart account to give wrong reports. So because of the close relationship, again there will be pressure to give wrong report. This is familiarity thread. This is going to generate sympathy towards them, and he may be tempted to give wrong report. Then former partner of the firm, our guru, person who taught us everything, that person is now becoming director of the company, officer of the company, or taking position as an employee who is closely involved in preparation of financial statements. This will create a lot of pressure. This will create a lot of pressure. Okay, a lot of pressure on the company, a lot of pressure on the chart accountant to give wrong reports. So if relatives are sitting in important positions, our former partner, our guru is sitting on the important positions, it's going to create pressure. Familiarity threat. If there is a long association with the client, 10 years, 15 years, 20 years, 25 years, they are so close relationship, it's again going to generate sympathy, create pressure to give wrong reports. Advocacy threat. Chartered accountant is performing audit. And at the same time, he is doing one more assignment for the client for promoting shares in market for IPO and FPO. Now both the assignments in audit, you are supposed to report on negative things. While promoting share, you have to focus on the positive things. Because of this conflicting assignment, there will be pressure to give wrong report. So if he is doing audit and at the same time he is promoting shares, it will create advocacy threat. He is doing audit and at the same time he is acting as an advocate in a litigation or a dispute for the client. That's going to again create advocacy threat. He is doing audit and at the same time he is lobbying, convincing politicians and political parties to make legislation in favor of the client. Again, they are conflicting. It will create pressure to give wrong report. Advocacy threat. These are examples, 3 examples of advocacy threat. If client is threatening, if you don't give clean report, we will remove you, we will replace you, we will bring someone in place of you. Intimidation threat. We will replace you, change you. If company is pressurizing CA employee, you do all the adjustments, you do all the manipulations, otherwise we will not give you promotion. Do wrong things, else we will not give you promotion. Intimidation threat. See, all these threats are for chartered accountants in practice as well as chartered accountant who is doing job. So bigger thing is, see, it's in a sequence. Threatened by replacing, dismissing auditor, intimidation threat. Threatened by not giving promotion, intimidation threat. Pressurized by seniors. We are the seniors. We have more knowledge. We have more experience. Do as per what we say. We will not help you. We will not support you. We will spoil your career. Intimidation threat. First giving significant gifts to auditor and then blackmailing him. We will disclose it to everyone that you took such big significant gifts from us. Intimidation threat. Then self-review threat. See, the examples which are given here are less as compared to what were given in the earlier module. After changes in the module, they have reduced number of examples. Correct, but then I am going to explain it little bit more because one point is very interesting. There can be MCQ on that. So what is self-review threat? Situation where auditor is supposed to check his own judgments, his own work, or work of his colleagues, In this situation, he will be under pressure. He may come under pressure to give wrong reports. Correct? Like, he only created internal control systems, and now he is only doing the audit. He will be under pressure to write only good things because he only made the systems. He is doing his own work. He will be under pressure to write only good things. That is self-review threat. Or he made basic data like fixed asset register. He made fixed asset register, and now he is only doing the audit. Self-review threat. He made data for actual valuation. He is doing the audit. Self-review threat. He has done accounting and he is only doing audit. Self-review threat. He has prepared financial statement. He is doing audit. Self-review threat. And now very interesting. Directors, officers, employee who is involved in preparing financial statement. Now director of the company, officer of the company, employee of the company who was preparing financial statement, he is now becoming member of the audit team. See what will happen? They did all the wrong things as a director, officer, employee. Now they are becoming part of the audit team and they are involved in the auditing process. So what is happening? By becoming part of the audit team, they are going to check their own work. And what do you think they are going to do? They are going to give all clean reports. So situation where auditors, audit team members are checking their own work or work of their colleagues, that situation is going to create self-review threat and put pressure on the chartered accountants to give wrong reports. And this is very interesting. Now understand the difference. If our relatives are sitting as directors, officers, employees, our partner is sitting as director, officer, employees, how we will go against them? That is familiarity threat. But if director, officer, employees, they come to the audit team, they are checking their own work. Now the threat changes. It will become self-review threat. I hope you are getting it. Our people going in the company, familiarity threat. Company's people coming in audit team, self-review threat. So that's what they're saying. They made the financial systems, they are only doing the audit, self-review threat. They made the original data, accounting, they are doing the audit, self-review threat. They prepared financial statement, they are doing audit, self-review threat. Apart from these threats, so these are 5 famous types of threat. Apart from that, there is possibility of other threats also, which cannot be categorized. This is called unique threat. For example, some personal information is taken and blackmailing is done to give wrong report. Religious ideology is used to give wrong report. Political pressure is used to give wrong report. Kidnapping is done to pressurize to give wrong report. They will be called as unique threats, which are not categorized above. So even that is possible. The conceptual framework specifies an approach for a professional accountant. As per conceptual framework, we are supposed to identify threat, then evaluate threat, and then address threat. Identify threat to compliance with fundamental principles, evaluate threats identified, address the threats by eliminating or reducing them to an acceptable level. Threat to compliance with fundamental principles fall in one or more of the following categories. Self-interest threat is a situation where when there is a threat that financial or other interests will get inappropriately influenced. Threats will inappropriately influence chartered accountant's judgment, behavior, or reporting. That is self-interest threat. Self-review threat. Circumstance in which threat that professional accountant will not appropriately evaluate results of previous judgment. Situation where he is evaluating his previous judgment or previous activity performed by him or by any individual of his accounting firm or employing organization, and he is supposed to check those things. Correct? There's a big pressure to give wrong report. That self-review threat. He's checking his or his colleague's own work. Advocacy threat. The threat that professional accountant will promote clients or employing organization position to the point that accountant's objective is compromised. Situation where he's promoting shares, acting as an advocate, working for the client, and at the same time doing the audit. This will create a conflict. Advocacy threat. Familiarity threat. See, you cannot go and write language as it is. First comes conceptual understanding, broad overview, broad memory, then specific memory. First comes understanding, then memory, then revision and writing. Guys, you cannot write as it is. You have to understand things and explain in your own language. Familiarity threat. The threat that due to long or close relationship with a client or employing organization, a professional accountant will be too sympathetic to their interest or too accepting for their work. Because of soft corner towards our relatives and friends which are sitting in the company, chartered accountant may come under pressure to give wrong reports. Familiarity threat. Intimidation threat. The threat that a professional accountant will be deterred. That means he will be put under pressure. So deterred, that means stopping chartered accountant to work objectively, working properly by putting pressures on him. Correct? That is intimidation threat. Putting pressure, trying to frighten him, that is intimidation threat. Now, examples of these threats, circumstances that may create self-interest threat. We have seen this. There is a direct financial interest in the form of equity, debt, loan. It's a self-interest threat. Undue dependence on total fees from client. Big portion come from particular client. Self-interest threat. Having close business relationship with client. Self-interest threat. Again, we are not thinking about Companies Act right now. We know that if there is a business relationship, the person gets disqualified. We are not thinking from the point of view of Companies Act. We are thinking from point of code of ethics, and it is a conceptual discussion, principle based discussion. Concern about possibility of losing client. Already things are weak. There is a possibility of losing client. He may fear of losing client and give wrong report. Potential employment with client can become reason to give wrong report. Having access to confidential information of client, that might be used for personal gain. He is having a lot of benefit, personal gain. Maybe he's having a portfolio, he's doing some research, he's getting some satisfaction. That will create self-interest threat. Now, our text comes directly from the module, and there is a mistake in the module. What they have done, they have incorporated wrong examples in self-review threat. We have confirmed it is a misprint from ICAI. So whatever we have discussed in the chart, that is relevant. Examples of circumstances that may create advocacy threat. Now what is that? Advocacy threat. We know you are doing audit, and at the same time you are doing these other assignments, promoting shares in entity when the entity is a financial statement audit client. You're doing audit and then promoting shares also. Both are against each other. Advocacy threat, acting as an advocate on behalf of assurance client in litigation or dispute with third party. You're acting as an advocate, at the same time you're doing audit. Advocacy threat, lobbying in favor of legislation on behalf of client. You are lobbying for a legislation which will benefit the client, at the same time you are doing audit. That is a advocacy threat. Example of circum that may create familiarity threat. A member of engagement team having close or immediate family relationship with director, officer. Family threat. Member of engagement team member having close immediate family relationship with an employee of the client. With the employee of the client, who is in position to exert direct significant influence over the subject matter of the engagement, who is able to influence subject matter, that means financial statement. Family threat, a former partner, our guru, our former partner of the firm being now becomes director or officer of the company, or an employee in a position to exert direct financial significant influence or subject matter of the engagement. That will be familiarity threat. Long association of an audit team member with the audit client, familiarity threat. Example of circumstances that may create intimidation threat. Being threatened with dismissal, replacement in relation to client engagement because of disagreement about professional matter. Threatened that you will be dismissed, removed, replaced. Intimidation threat. Feeling pressurized to agree with judgment of client because client has more expertise. Using experience, expertise as pressure. Intimidation threat. Being informed that planned promotion will not occur unless the chartered accountant agrees with inappropriate accounting treatment. Intimidation threat. Specific circumstances give rise to unique threat to compliance with one or more of the fundamental principles. Such unique threats cannot be categorized. So there can be some unique threats in either professional or business relationship. A professional accountant in public practice should always be on alert for such circumstances and threats. Now next is evaluation of the threat. So once you come to know about the threat, you are supposed to find out whether this threat is acceptable or not. Acceptable means even if threat is there, we are confident that we will be able to follow 5 fundamental principles and perform our assignment without any problem. That's called acceptable level. So once we identify the threat, we are supposed to understand, evaluate, measure whether the threat is acceptable or not. Now, what do you mean by threat is acceptable? What do you mean by threat is acceptable? We will consider threat as acceptable. We will have to check whether threat is acceptable by applying RITPT, reasonable and informed third party test. We will have to apply RITPT, reasonable and informed third party test. Now, what is this reasonable and informed third party test? See, I will give you a parallel example. Suppose anytime you want to find out, correct, whether your actions are ethical or not, you should simply think, if I share this information that I am doing this activity in this particular situation with my parents, and if my parents are going to say it is absolutely fine, ethical, that means it is ethical. If they are going to object, that means it's unethical. So I simply have to think how my parents will react and I will get the answer. On the same lines, we have to think here. We simply have to think, if I provide all the information which I am having about the situation, about circumstances, with neutral, independent, knowledgeable third party, and if their conclusion is also the same conclusion which is my conclusion, it will prove that my conclusion is appropriate. If I'm going to give information third party and they are also going to conclude that threat is acceptable, and I am also concluding threat is acceptable, that means my conclusion is appropriate. So if you want to find out whether threat is acceptable or not, you have to apply RITPT. So we are discussing more on RITPT. So we have to make our conclusion and then evaluate whether our conclusion is appropriate. We simply have to think, what if I give all this information to neutral, knowledgeable third party? Are they going to have same conclusion that the threat is acceptable like I am having? Then we will call it acceptable level of threat. Now you may apply this test by simply thinking about it, or you may apply this test by going to a specific third party. You can go to specific third party and share all the information and ask for their conclusion, and then from that conclusion check your conclusion. Both the things are possible. You may simply think about it, or you may go to third party and share information. If you are going to third party, that third party need not be a chartered accountant. Maybe a chartered accountant, maybe a lawyer, maybe a company secretary. Person should be neutral, should be knowledgeable, who is able to understand the situation and make good interpretation in present circumstances. So when we are evaluating things, we use RITPT test, a reasonable informed third party test. Now, what is this evaluation of threats? Evaluation of threats. Okay. Now what is it? What is this? Okay, guys. This is very simple. This is very simple, straightforward. Let's read. We already discussed this in a chart. The conditions, policies, and procedures described above might impact the evaluation of whether a threat to compliance with fundamental principle is acceptable. We have to see circumstances, positions, policies, situation to find out whether threat is acceptable or not. An acceptable level is a level at which a professional accountant using a reasonably informed third party test would likely conclude that accountant complies with fundamental principles. If the conclusion is that he is able to comply with fundamental principle, there are no problems. That means threats are of acceptable level. They are not having any huge impact. RITP test. The reasonable informed third party test is consideration. Consideration means to think carefully. It's a test where he thinks carefully by professional accountant about whether the same conclusion would likely be reached by another party. Such consideration is made from the perspective of reasonable informed third party who weighs all relevant facts and circumstances that the accountant knows. He shares everything what he has or could reasonably expected to know at the time the conclusions are made. Reasonable informed third party does not need to be accountant. The other person may not be accountant, but would possess the relevant knowledge and experience to understand, evaluate appropriate of accountant's conclusion in an impartial manner. Now, addressing threats. So now we identified the threats. There are 5 different types of threats. We evaluated it. Suppose our evaluation says that threats are not of acceptable level. They are above acceptable level. It is affecting professional judgments, his activities and reports. It's affecting. What should be done? There are 3 options. Option number 1, eliminate the threat. Eliminate the threat. Suppose you are having shares of the company. Sell shares. Self-interest threat will go away. Suppose relative of the team member are sitting as director. Change the team member. Threat will go away. So you can try to eliminate the threat. See if eliminating is possible. If eliminating is not possible, then go for apply safeguards. Safeguards are the actions which are going to reduce level of the threat. Apply safeguards. Option 3, If it is not possible to eliminate or not possible to reduce threat to an acceptable level, then in that case you are not left with any option. You will have to resign, get disassociated with the assignment. And these three things should be followed in the same sequence. First, you should see if it is possible to eliminate the threat completely. If that's not possible, then you should check whether it is possible to apply safeguard and reduce threat to acceptable level. When even that is not possible, then you should think about declining or ending the client relationship, declining the client or ending the client relationship, because now no other option is left. Addressing threats. If professional accountant determines that identified threat to compliance with fundamental principles are not acceptable level, if a professional accountant determines that identified threat to compliance with fundamental are not acceptable level, if they're not acceptable level, the accountant shall address the threats by eliminating them or reducing them to acceptable. Eliminate them or reduce them to acceptable level. The accountant shall do so by, how is going to address threat? Eliminating the circumstances. Eliminating the circumstances including interest or relationship that are creating threats. Eliminating the circumstances including interest or relationship that are creating threats. Eliminate those circumstances. Apply safeguard steps where available and capable of being applied to reduce threats to an acceptable. Reduce threat to acceptable. Decline or ending specific professional activity. You may resign. You may decline or you may resign doing a particular assignment. Actions to eliminate threat. Depending on facts and circumstances, a threat might be addressed by eliminating the circumstance. You may remove the circumstances creating the threat. However, there are some situations in which threats can only be addressed by declining or ending the specific professional activity. You should try to eliminate or reduce it, and sometimes it is not possible. This is because possible you decline or resign. This is because the circumstances that created threat cannot be eliminated and safeguards are not capable of being applied to reduce threat. Safeguards are not able to reduce threats to acceptable level. Now safeguards. Safeguards are the actions with the help of which we can reduce the threat. Now, which safeguard is going to reduce which particular threat, that is not that important. Please don't get into it. Just understand one thing, that this action can reduce the threat, and if that is the case, it is a safeguard. So actions which are able to reduce the threats to acceptable level, which may be able to reduce threat to acceptable level, that's called as safeguards. Examples of the safeguards: safe parade. As for separate team, if you know that confidential information is involved, make a small experienced team for confidential information, and other part of the team is not involved. If within your team you make a separate small team for confidential information will remain with few people, and it reduces possibility of leak of information. Greatly reduces possibility of leak of information. So making separate smaller teams for confidential information is going to reduce level of threat. It is going to reduce threats towards confidentiality. It is a safeguard. Now, which particular threat? Don't think much about it. So this is going to reduce threat towards confidentiality. Then you appoint some CA firm, appoint another firm to perform or re-perform very sensitive area of the assignment, so that you don't end up giving wrong reports. That is also very important safeguard. That reduces threat. Appointing some firm to perform or re-perform a particular sensitive area of the assignment, so that no mistake happens. Correct? That is a safeguard. No wrong report is given. That is a safeguard. assign more time and more qualified senior people to a particular part of the engagement, so that again, to avoid doing mistakes, avoid giving wrong report, it is a safeguard. R stand for reviewer. Appointing a very good reviewer, knowledgeable person, knowledgeable independent person who is not member of the team. Not member of the team. Correct? So you appoint a very good reviewer who sees all the work in and out and make conclusion whether anything is wrong. If you have a good reviewer, good reviewer who's not a part of that audit team, that reduces self review threat, that because that reduces chances of giving wrong report. Different partner, different teams and different reporting lines for assurance and non-assurance client. Separate team partner doing audit. Separate partner team and separate vertical altogether doing other work. This will avoid conflict of interest. This will again reduce the threat. Different partner and different team for assurance and non-assurance. All these are safeguards. Safeguards are actions, individually or in combination, that accountant takes that effectively reduce threats to an acceptable level. So there's action to reduce threat to acceptable level. Safeguards vary depending on facts and circumstances. They keep on varying. You can have different safeguards. Examples of the action that in certain circumstances might be safeguard to address threats. Assigning additional team and qualified people is a safeguard. To required task when an engagement team has accepted might address self-interest threat. Putting more time and more people, that will reduce the threat. Having an appropriate reviewer who was not member of the team review the work, perform or advise as necessary might address self-review threat. Having a good reviewer will reduce the threat. Using different partners and engagement team with separate reporting lines for assurance and non-assurance clients again reduces the threat. Involving another firm to perform or re-perform part of the engagement might address self. Appointing someone to perform or re-perform part of the assignment might address self-interest, will again reduce the threats of wrong reporting. Separating teams when dealing with matter of confidential nature might address self-interest threat. Separating teams for confidential information. Now guys, it's okay. Let's see questions also. Let's first see. So if I will say, we have seen three types of things as a gist. As a gist, we can conclude that conceptual framework talks about three types of things. There are 5 different types of threats and examples are given. To find out whether threat is of acceptable level or not, we have RITPT test, and there are safeguards trying to reduce threat to acceptable level. Let's see questions. Now there's a very wonderful case study. So there they explain that a company is having bad financial position. They are not able to pay the audit fees. Now that is a situation. If he gives modified report, qualified report, this company will collapse and he will lose the audit fees. If he gives clean report, wrong report, they will get loan from the bank. They will get loan from the client, from the bank, and they will get their audit fees. So now this is a tricky situation, whether to think about personal interest, personal financial interest, or think about fundamental principles. Think about honesty, giving correct report. Correct. So there is a self-interest threat. But then First 5 lines are useless. First 5 lines are useless. Important is explain the types of threat. So in regarding first 5 lines, you can give the reference, discuss the case, and explain the self-interest threat. And the main answer is types of threats. So you have to explain types of threats. We have seen I am fair, correct? We have seen the I am fair, interest threats, then familiarity threat, advocacy threat, intimidation threat, self-review threat. So you have to explain those threats. And along with threats, now there's again a question whether to explain examples or not. That depends on number of marks. If it's a 5 mark question, you have time, and it is a part of the initial part of the paper. Then I will say that explain, give all the examples what you know. Give all the examples what you know. But then if you feel that it's only a 3 mark question and you don't have a lot of time, explain different types of threats and give maybe one example. So depends on situation, how many examples should be covered, situation, time, your writing speed, and so on. Self-interest threat and self-review threat. How to distinguish? Now listen guys, there is nothing to distinguish. Simply explain two different types of threat and simply give the examples. We've already seen self-interest threat, BP Limited was the shortcut. We have seen that. And self-review threat, they have written few more more than what we have seen in Bhaskar book, because it is based on earlier edition of the module. I will suggest that it is good to write these examples. It's absolutely fine if you write more. You should not write less. We have seen this, correct? We have seen this, checking systems which you have made, doing audit of systems which you have made, doing audit of data which you have made, doing audit of financial statement which you have made. And we have seen very interesting thing also. Directors, officers, or employees who are involved in financial statement preparation, they are becoming part of the team member, audit team member. That equals to self-review threat. Then there is a question on safeguards. There is a question on safeguards. Now listen guys. Before earlier code of ethics, there was a concept of firm level safeguards and entity level safeguards. Firm level safeguards and entity level safeguards. Now this distinction is gone. There are only safeguards. So you can say that it's a old category question. In today's time, there's only one safeguard. We have seen the shortcut safeguard parade. We have given the shortcut. So you have to write answer from the Bhaskar book. See, we have given the Bhaskar concept number P.170. So you have to write that shortcut. Okay. Now let's see MCQs also. This is a very interesting MCQ. Very interesting MCQ. MCQ number 5 and 8. See, both are similar, but there's small difference, and that plays all the trick. In both the MCQs, what is happening? In both the MCQs, chartered accountant is an auditor doing audit. In fifth number MCQ, see, don't worry about this sequence, okay? We have arranged it. We have rearranged things, so that's why this has happened. Don't worry about that. Okay. So in fifth number MCQ, what is happening? In fifth number MCQ, client is saying that you give training to our employees with respect to Ind AS. You train our employees with respect to Ind AS. So please give training. In 8th number of MCQ, they are saying you do actuarial valuation and you tell what should be the employee benefit liability. You prepare actuarial data which will lead to accounting of asset, liability, income, expense. You prepare that data. Okay. So in one they are saying to give training, and in other they are saying to prepare the data. How they have approached these two situations? Now they are saying we have to analyze the situation whether assignments are affecting professional judgment of the auditor. Whether the assignment is affecting professional judgment of auditor. Is it affecting professional judgment? Is it affecting material? Is it affecting professional judgment? Is it affecting material amount? Is it affecting subjectivity of the auditor? They are saying training is not a very big assignment. There is this is training is not a very big assignment. They made the conclusion that it is not affecting material items, it is not affecting big things, so it is acceptable. So they are saying audit and giving training together are acceptable, but preparing the data which is required for accounting, this is not acceptable. This is not an acceptable activity. There is a self review thread. So it's interesting. Training is acceptable, but preparing actual data is not acceptable. It is not self interest thread, so that is wrong. It is not matter of competence, that is wrong. And you cannot reduce this thread simply by putting it in audit report. No. So that is wrong. So training is not affecting professional judgments, material amount, subjectivity of the auditor. You can do it. And then S1 is sample paper 1. So first time institute released some MCQs, that is from sample paper 1. Self review threat, preparing actual valuation data and then you are doing the audit, it is a self review threat. It's not acceptable. Simply using different partners is not going to help. That is not going to help. Now, then 13 number MCQ, again very interesting. So firm is, you are appointing a firm as auditor. There are two partners, K and B. K's brother is sitting as managing director of the company. Brother is sitting in position of managing director. And other partner is the good friend of managing director. So one partner is having brother in MD, another partner is having friend in MD. So what kind of threat? They are very known to each other, close to each other. It creates familiarity threat. Should not do such kind of audits. Now we are going to very, very interesting topic of having a wonderful name, and that is Noklar. Noklar. What a wonderful name. Noklar. What is it? Noklar means non-compliance of law and regulations. Chartered accountants may come across situation where client or employing organizations, they are not complying with law or regulation. In this situation, what chartered accountants are supposed to do? They should inform their seniors. What they should talk, what they should explain. Are they supposed to go to any authority? Are they supposed to go to parent company? Are they supposed to give any public notice? What they should do? What are their responsibilities? What they should do? That's a big question mark. And here comes Noklar. What do you mean by Noklar? What do you mean by Noklar? Noklar is a part of code of ethics. It gives specific guidance what chartered accountant should do if they come across non-compliance. There is section 260 of part 2 of code of ethics. What should chartered accountants in service do if they come across non-compliance by employer, or below that TCWG of the employer, or management of the employer, or employee of the employer, any other employee of the employer? What should CA in service do if there is a non-compliance of law by employer and its people? Then there is section 360. Section 360, that is given in part 3. What should CA in practice do if he comes across non-compliance by client? Non-compliance by client, or TCWG of the client, or management of the client, or employee of the client. What is he supposed to do? So these are specific guidance given in Code of Ethics, section 260-360, explaining what we are supposed to do if we come across non-compliance. What do you mean by non-compliance? Non-compliance means going against, doing something which is contrary to existing law, rules and regulation. That's non-compliant. That means it includes omission, not doing something which is required. You're not taking permission, you're not maintaining registers, you're not filing returns. That is a non-compliance. You are going against the law. You are crossing the pollution limit. You are crossing pollution limit. Correct? You are crossing the limits given by the law. That is also non-compliance. So non-compliance includes omission. It includes going against the requirement. It can be intentional or unintentional. It covers both, whether it is intentional or unintentional. By only employer, it's TCWG, management and employee. Client's TCWG, management and employee. Only limited set of people. We are not interested in non-compliance by n number of people. We are not here to do public service. We are interested in non-compliance by specified people only. See, it is not going. So NOCLAR is specific guidance if there is a non-compliance by specific set of people. We are not covering personal misconduct. Now, what people do in their personal life, which is different from business or professional life, we are not bothered. It is not covered by NOCLAR. If person does drink and drive, not covered by NOCLAR. If he does, if he hits someone, not covered by NOCLAR. If he is doing forgery at home, forging will of grandfather, it's a personal thing, not covered by NOCLAR. NOCLAR doesn't cover personal non-compliances of the law, personal misconduct, personal long things. It doesn't cover non-compliance by other parties. It's what supply, he not interested in what supply, if suppliers are doing non-compliance, not interested if suppliers are doing non-compliance, customers are doing non-compliance. We only focus on non-compliance by specific set of people. Then they're explaining examples, what, in which areas you will come across non-compliance. Examples of different types of non-compliance you may come across. You may come across financial crimes in a sequence of severity. Terrorist financing. Below that, you may come across money laundering, black to white. You may come across bribery, corruption. You may come across insider trading. You may come across fraud reporting. You may come across tax evasions or involving financial matters. You may come across where financial products and services are not as per requirement of RBI, policies are not as per requirement of IRDA, client data is not protected, or other laws. You may come across environmental limits are not complied with, environmental protection law is not complied with, public safety, public health and safety is not complied with. So these are the examples of different non-compliance. It can be financial crimes, it can be financial matters, it can be other matters also which are relevant for the entity. It can be other matters also. What is objective of NOCLAR? Why it is made? When non-compliance happens, chartered accountant should not run away. Oh, confidentiality, confidentiality, confidentiality. Simply shut your eyes, it's a confidentiality, stay mum. No, that's not a correct approach. They should respond. They should behave responsibly, they should respond. NOCLAR is made so that chartered accountant takes some important steps if there is a non-compliance. It is only a clarification. It is not increasing responsibilities and duties. Listen guys, compliance of the law is responsibility of the management. Prevent, detect, correct non-compliance is responsibility of the management. To find out whether non-compliance has happened is responsibility of the court. These responsibilities are as it is. There is only clarification. What should be our response if there is a non-compliance? This is not to increase any liabilities or obligations. It is only a clarification. What should be our response Other responsibilities remain same as they were. They are not affected by NOCLAR. In fact, NOCLAR emphasizes that managements do their work properly and leave few things to court. It is not your responsibility. Let's read. In the course of providing professional service to client or carrying out professional activities of an employer, a professional accountant may come across instances of non-compliance. They are saying when a chartered accountant is providing professional services, or when a CA is doing a job, chartered accountant may come across non-compliances of law, suspected non-compliance or actual non-compliance by client and its people, by employer and its people. So it simply gives guidance what should be the response, what should be done in this situation. Meaning of non-compliance. Non-compliance with law and regulation comprises of, non-compliance means either act of omission, you're omitting something, you're not doing something, or you're going against the law. Intentional, unintentional, which are contrary to the prevailing law or regulation, committed by client or professional accountants employing organization, client or employing organization, TCWG of client or employee organization, management or employee of client or employing organization. So, client and its people, employer and its people. However, NOCLAR under revised code of ethics does not address personal misconduct. NOCLAR under revised code of ethics does not address personal misconduct, does not address personal misconduct unrelated to business activities of client, employing organization, non-compliance of parties other than listed out in definition of NOCLAR. Does not address. So they are not covering if people do something wrong in their personal lives, personal misconduct unrelated to business activities of client, employing organization and by parties other than listed out in definition of NOCLAR. No, not interested. Examples we have seen: financial crimes, related laws, money, terrorist financing, money laundering, bribery, corruption, insider trading, fraud, tax evasion, or financial matters related to financial products, services, data protection, or other laws, environmental protection, non-compliant, public health and safety non-compliant. The objective of NOCLAR is that turning a blind eye to potential NOCLAR is not an appropriate response. Don't run away. Don't run behind confidentiality from chartered accountants. While turning blind eye is not response, there should be a proper response from chartered accountant while placing renewed emphasis on role of management and TCWG in addressing the matter. Further, it increases awareness and understanding among professional accountants for their legal and regulatory responsibilities. It is simply giving clarity what should be done. Some important clarifications about NOCLAR. Important clarifications about NOCLAR. See, first of all, now NOCLAR gets, as NOCLAR is applicable, that after NOCLAR, does it mean that we are supposed to increase our legal knowledge? No. We are supposed to maintain same level of legal knowledge as we used to maintain earlier, which is required for generally performing audits and other assignments. After NOCLAR, it doesn't mean that we have to increase level of legal knowledge. That is not required. We are supposed to maintain the same knowledge which is generally required to perform the assignments which we perform. That's it. So after NOCLAR, it definitely doesn't mean that we should increase our knowledge level. Is NOCLAR increasing our duties? No, it is simply giving clarification. Compliance is the responsibility of TCWG management. Prevention, detection, correction is the responsibility. To find out whether non-compliance happens, responsibility of court and adjudicating authority. It is not at all increasing our responsibilities and duties. It is simply clarifying what should be done if there is a NOCLAR. It is simply giving clarification. It is not increasing our duties or responsibilities. It is only clarifying how we should respond. Coverage. Are we supposed to go and check all the different types of non-compliance? Coverage of NOCLA is definitely more than SA 250. It is covering a lot of non-compliances, but not everything. We are not concerned with personal misconduct of the people. We are not concerned with non-compliances by other parties. No, not at all. And we are not concerned with matters that are inconsequential. That means immaterial. Inconsequential means that means very, very small, immaterial. So there is no need to have more legal knowledge, no increase of duties. Correct. Coverage is good, but definitely not covers everything. Whether every non-compliance we are supposed to go and inform any authority? No, that is not the case. As per NOCLAR, if certain conditions are fulfilled, then only we are supposed to go to authority explaining the non-compliance. And in that, we are supposed to stay mum if law prohibits. Yes, sometimes law prohibits. Law puts prohibition, like National Security Act, POTA, Prevention Terrorism. Sometimes they may stop people from giving confidential information. So that doesn't mean that we are supposed to disclose everything to the authorities. No. Don't misinterpret NOCLAR. See. NOCLAR will be applicable if professional accountant encounters or is made aware of non-compliance or suspected non-compliance in course of providing professional service to a client. He is not required to investigate or nor responsible for ensuring complete compliance. No need to do anything extra. You are not here for compliance or detect all the non-compliance. No, not at all. While performing your professional service, if you come across non-compliance, then apply this. So it doesn't increase duty. No more knowledge is required. A professional accountant is expected to apply knowledge and expertise and exercise professional judgment. However, he is not expected to have level of knowledge of laws and regulation greater than that which is required to undertake engagement. No, not at all. Not supposed to increase level of knowledge. Whether an act constitutes non-compliance is ultimately a matter to be determined by court and other appropriate adjudicating authority. That's so no increase in duties, no additional knowledge is required. Coverage. We are not concerned with personal misconduct, matters that are clearly inconsequential, small, personal misconduct not pertaining to business activities of client not covered. Not interested in them. Coverage. As per International Ethical Standard Board, disclosure of matter to an appropriate, that is disclosure, appropriate authority would be precluded. It means excluded if doing so would be contrary to law regulation. Not supposed to disclose everything. Only certain situation we go and disclose. In fact, they say if it against law, don't make any disclosures. Law is bigger than code of ethics, they're saying. Now, what is difference between NOCLAR and SA 250? NOCLAR is broader. NOCLAR is applicable to all the chartered accountant in practice. All the chartered accountant in practice. It is applicable to all the chartered accountant practice doing all the different type of assignments. It is applicable to all the, so NOCLAR is having a broader, it is applicable to all the chartered accountants in service doing all different types of jobs. So it has a universal applicability. All chartered accountants, all people who are doing job. Definitely responsibility changes. Responsibility is different for different chartered accountants. SA 250 is for specific situation. If a practicing chartered accountant is doing audit of financial statement, then only in that case SA 250 will get applicable. So NOCLAR has a broader applicability. SA 250 is for specific situation. Law coverage. NOCLAR says that we will evaluate all the laws affecting financial statements and apart from that having financial or non-financial impact. Suppose is non-compliance is linked to license or membership cancellation, some kind of prohibition or blacklisting. We are going to cover everything, analyze everything. All the laws having financial, non-financial impact. But that's not the case with SA 250. It's simply focus on those laws which are having direct effect on preparation of financial statement, on figures given in financial statements. that is tax laws and labor laws, and other laws which may have material effect, on financial statement or going concern. So it is focusing just on financial statement. NOCLAR is going much beyond it. So assignment coverage is broader, law coverage is broader. Impact, NOCLAR says to see impact on everyone, impact on investors, impact on creditors, employees, impact on everyone, all the stakeholders. But if we talk here, SA 250 is not having this concept of stakeholder. It simply says what is the focus, impact on financial statement, and what is the impact on going concern. Just focus on that. NOCLAR says that if there is a exceptional circumstances, like there is a eminent means very big breach of law, and there is huge harmful impact on the investors or creditors, employees, on stakeholders, huge breach, huge impact, he should go and inform the authorities. Yes, go and inform. Whether to inform TCWG and management before, that depends on situation. If he feels informing them will not be wise, it is not going to stop non-compliance, maybe it will become difficult to take non-compliance, don't inform. It's up to him whether to take TCWG and management in loop. Correct? That depends on the situation. If he thinks informing them is going to improve situation, go to them, else directly go to authorities. So in exceptional circumstances, it says go to it. SA 250 says that don't tell anything to anyone till the time law says it. So see, there's a change in approach. Here it says in exceptional circumstances, go to authority. Here it says never go to authority till the time required by law. So there is a change in approach. So NOCLAR has more assignments, more coverage, more impact analysis, and more disclosures. Let's see. Assignments covered. SA 250 is applicable only on audit and not other assurance engagement. However, NOCLAR is applicable on professional accountant in service and in practice. Everyone among those in practice applies to auditor as well as professional services other than audit. However, degree of responsibility changes as per the rule. Laws covered. SA 250 talks of auditors' responsibilities for laws. Auditors' responsibilities for laws. Correct? Having direct effect on determination of material amounts and disclosure in financial statements such as tax, labor laws, and other laws and regulation that do not have direct effect on the determination of the amounts and disclosure in financial statement, but compliance with which may be fundamental to operating aspects of the business. NOCLAR, while being alike to 250 till this point, is further ahead of it in that it takes into account non-compliance that causes substantial harm resulting in serious consequences in financial, non-financial terms. So SA 250 focuses only on financial statement matters. NOCLAR is going beyond that. All the laws having financial, non-financial impact, not just financial statements. In SA 250 there is no concept of stakeholder, but in NOCLAR there is a concept of stakeholder. It says to see impact on everyone. Disclosure to authorities. As per NOCLAR, if there are exceptional circumstances, the professional accountant might become aware of imminent breach of law or regulation that would cause substantial harm to investors, creditors, employees, or general public. If there is a imminent breach having huge impact, having first considered whether it would be appropriate to discuss the matter with management or TCWG, the accountant shall exercise professional judgment and determine whether to disclose the matter immediately to an appropriate authority in order to prevent or mitigate the consequences of such imminent breach. If disclosure is made, that disclosure is permitted. So in imminent breach, you have to go and inform. It's a matter of professional judgment whether immediately inform or keep TCWG and management in loop. In SA 250, there is no such thing. It may be noted that situation where the disclosure ought to be made by the auditor, the appropriate authority for purpose of disclosure will depend on nature of the matter. Appropriate authority will depend on the nature of the matter. If it is a listed entity, it will be SEBI. If it is a bank, it will be RBI. If insurance company, it will be IRDA. Appropriate alignment has been made in Code of Ethics. They have tried to keep things in harmony. That NOCLAR and CA Act, they don't contradict with each other. Applicability of NOCLAR. As per International Ethical Standard Board, NOCLAR is applicable to all the chartered accountants in practice doing any practice work, all the chartered accountants who are doing job, any job. But as per ICAI Code of Ethics, NOCLAR is applicable to only those practicing chartered accountants who are doing audit of listed companies. Who are doing audit of listed companies. Only to those chartered accountants, only to those chartered accountants who are doing job in listed companies. So connection with listed companies applicable. That's very interesting. It will be targeted in MCQs. It is applicable from 1st of April 2022. For CA in service, it is section 260. For CA in practice, it is section 360. We already know about it. The International Ethical Standard Code of Ethics makes NOCLAR applicable to all assignment in case of member in practice and all employees in case of member in service. However, in ICAI Code, as of now, Institute has restricted applicability to NOCLAR to audit assignments of listed entities in case of member in practice and member in service. Applicability has been restricted to employees of listed entities only. Further, section 260 and 360 of Code of Ethics issued by ICAI deals with NOCLAR, applicable from 1st April 2022. Now, how to respond? It is given separately. How to respond for CA in service is given in section 260 part 2, and for practice guys section 360 part 3. Now, in case of CAs in service, it is further divided into two parts, that how senior accountant should respond and how chartered accountants other than senior should respond. Now see, the interesting thing is, the actual NOCLAR, how we should respond, is not given in detail in our course. How we are supposed to respond is not given in detail in our course. Only an overview is given. I have written myself things in bracket so that more understanding is obtained. They are simply giving overview of what CA in service should do. If CA in service comes across the NOCLAR, number one, he should obtain understanding of the matter. What is the non-compliance, which law is involved, which sections are involved, what are the consequences? He should understand the matter. Then next, address the matter. He should immediately go to the colleagues, to seniors, communicate what has gone wrong, how to rectify it, how to make things better, what penalty should be filled. He should go and address the matter, inform people and ask for rectification and make things better. Then he may go for further action. If he thinks that there is no response, he may go for further action, informing management of the parent company or resigning. So one is addressing matter, further action. He may think about disclosing matter to appropriate authority, RBI, SEBI, IRDA. He can take 3 steps: going to immediate seniors, taking further actions, or going to appropriate authority. He can take advice for that. He can take consultation internally with the colleagues, seniors, or law firms or ICAI. What to do? And simply address, take further action, or disclose, or tell to the appropriate authority what should be done. He can take advice, seeking advice. If there is an imminent breach, there is a very huge breach causing substantial harm to people, immediate communication to appropriate authority. Don't wait for anyone, you can directly go. And everything should be documented. This should be the 7-step response if there is a NOCLAR. 7-step response if there is a NOCLAR. Documentation requirement. As per revised code of ethics, NOCLAR, we are supposed to document what? We are supposed to document what TCWG and management did, what was their response. We are supposed to document what was our judgment, what kind of our judgment, and what we did, and it's rational. So what others did in non-compliance, what we did in non-compliance, and how we ensured that public interest is fulfilled and protected. So what they did, what you did, and how public interest is fulfilled. As per standards on auditing, Asset 250, Asset 230, they say similar things. Document, non-compliance is a significant matter. Asset 230 says that you should document all significant matters. So you're supposed to document nature, what exactly went wrong, nature of the things. If there is a nuclear, what understanding the matter, that should be documented. Then what were the issues involved and where it was difficult to make professional judgment, issues involved and professional judgment. So you have to document the matter, issues involved, you have to document issues involved, correct, and professional judgment wherever it was required. Then what conclusion was reached and what was the rationale behind it. Every damn thing need to be documented. Every damn thing need to be documented so that it is easy for reference later. The same things are there in asset 230 and 250. Revised code over and above require professional accountant to follow additional document requirement. How management and TCWG have responded to the matter. The course of action the accountant considered, the judgment made and the decision that were taken having regard to reasonable informed third party test. How accountant is satisfied that responsibility of public interest, what they did, what you did, how public interest is fulfilled. This document is in addition to complying with document requirement under applicable auditing standards. For example, require a professional accountant performing an audit of financial statement. Prepare documentation sufficient to establish an understanding of significant matters arising during the audit. The conclusion reached, it is a significant matter, non-compliance significant matter. Document understanding what kind of non-compliance, what are the issues involved, where professional judgment is required, conclusions, and then supporting. Those things are repeated again. With TCWG management, including nature of significant matters discussed and with and when whom discussion took place. Document identified suspected non-compliance, result of the discussions where applicable with TCWG and other parties, outside entities. So guys, we are through with NOCLAR. Let's see the gist. If we talk about, let's see the gist of what we have seen in NOCLAR. We see the meaning. It's a specific piece of guidance what should be done if you come across NOCLAR, whether you're in practice, whether you're in job. That's the meaning. Important facts. No need to have more knowledge, no need for more duties. Doesn't mean we are covering more laws. Not that doesn't mean we disclose everything to authorities. Applicable if you have a listed company, listed entity connection. Response, brief response is given what people in service should do, and there should be detailed documentation. It will be useful because we are talking about legal matters, that too non-compliances. They will be tricky. Let's see last few things. Section 2, subsection. Now we are through with the introductory part. We are through with Code of Ethics. Now we are going to CA Act. We are not going to see all the sections. We are not going to see all the sections. We are going to see only some of the sections which are important for us. Okay, so now there's a concept of members deemed to be in practice. See, 95% of the provisions of professional ethics are for those chartered accountants who are in practice. So, moment you take certificate of practice, you are given right to sign audit reports, balance sheet, but then mountain of obligations, they fall on you. There are a lot of duties you're supposed to perform, a lot of things you're supposed to take care of. So, COP comes with rights as well as obligation. So some chartered accountants may try this, that I will not take COP, I will do consultancy etc. work without COP, I will earn money without any obligations. This may happen that some chartered accountants are trying to act smart and run away from the requirements of professional ethics. It is very much possible. To cover those chartered accountants, a concept was derived, members deemed to be in practice. It's a very simple concept. Very simple. It is simply list of activities. If any chartered accountant is performing list of activities given here, he will be deemed he will be deemed to be in practice. All the requirement of professional ethics will get applicable to him. He cannot run away. So it is a simply list of activities. We are going to see that list of activities. Now, important condition. See the chart which is given here. See chart which is given here. See guys. CA can perform the list of activities which are given individually or in partnership. Both the things, both are possible. He can do it individually or in partnership. If he is doing for remuneration, that means he is doing in professional capacity. If he is doing these activities for remuneration, that means professional capacity, I want to earn money. If he is doing it for remuneration, for money in professional capacity, as providing accounting services, auditing services or consultancy, that means the intent of doing practice. It is for remuneration in professional capacity. For remuneration, that means professional capacity. That means there's an intent. Deeming fiction will get applicable. Yes. But if he's doing without remuneration, that is personal capacity. He just wants to help relatives. He just wants to help friends. He wants to do social work. If he's doing it without remuneration, personal capacity, deeming fiction will not be applicable to him. He is doing some social work, that's fine. If he is working as an employee capacity for the employer, he is simply helping employer, he is taking the assignment. If you are working as an employee capacity, you are not doing practice, you are not taking responsibility, again deeming fiction will not be applicable. It's applicable only in one situation, if you are doing it for remuneration in professional capacity. Now, Section 2, subsection 2, clause 1 to 3. See, no need to see what is here in clause 1, 2 and 3. We have simply combined everything and made a simple list which is easy to remember. Now, activities given in clause 1, 2, 3. Practice related activities. If after becoming chartered accountant, you go and describe yourself as a public accountant, you give accounting service. If you describe everyone that you are a public accountant, deemed to be in practice. You set up the office, deemed to be in practice. You offer or offers to perform any accounting or accounting advisory, auditing or any certification, verification work, deemed to be in practice. So if after becoming chartered accountant, describing himself as the accountant, setting up his office, offering this work, deemed to be in practice. This is definitely, this CA related work, if you're doing this, deemed to be in practice. Now there is an exception. We already saw, if you're working as an employee for your employer, you are not doing it as a practice, then if you're working for employer, deeming fiction is not applicable. But there's an exception. If you're doing job under CA or CA firm, working as an employee under CA or CA firm, you are deemed to be in practice. The job guy is deemed to be in practice. It's an exception. Why? So that you get right to train one article. Right to train one article, not obligation. Deeming fiction is applied. Deeming fiction is applied in chartered accountant doing job just to give. Correct? Just to give him right to train article, not any obligation. If chartered accountant is doing job with armed forces, he is supposed to have ethical behavior. Again, deemed to be in practice. So there are some practice related activities, service related activities. Then we have section 2, subsection 2, clause 4. Very interesting. Clause 4 gives power to ICI council that you can go on increasing the list of activities whenever you want it. Whenever you think it is fit. They, keeping this power in mind, they issued regulation 191. They issued regulation 191. If you're doing work where money is involved, if you're executor for an individual implementing his will, bigger than that, trustee for a trust, bigger than that, receiver or liquidator of a company, if you are acting as executor of the individual, trustee of the trust, receiver, liquidator of the company, big, if you're working for big entities, monetary activities for entities, or where there are dispute, you are acting as an administrator and arbitrator. In dispute, you are acting as administrator, arbitrator. Or you are giving advisory or representing for tax costing finance. They've increased the list. If you're doing this money related work, executor, trustee, receiver, liquidator, administrator, arbitrator, if you're becoming an advisor or representing anyone, these are two situations. If you're working for big entities, you're working for situations, or there's a special appointment, court or central government or state government has appointed as secretary. Secretary is the most powerful person in any ministry. Most powerful person in any ministry. Defense secretary, finance secretary. If you're doing this work, deemed to be in practice. But if it is on salary come full-time basis, then deeming fiction won't apply. So, the list is made bigger by regulation 191. They made list even bigger. They issued management consultancy services. Again, that is a list. That is a recent addition. So we have clause 1 to 3, and then the list is increased by regulation 191. List is increased by management consultancy services. Now, what is implication of this management consulting services and all the activities which we have discussed? Person who is performing this activity or management consultancy services will be deemed to be in practice. Yes. And because this list defines CA related work, chartered accountant who are having COP and doing practice, their scope of work increases. They will be able to do more work because CA related work is defined. It is big, it is made bigger. So it is going to increase their work also. So it is having impact. It is going to bring some people in practice, and it is going to increase scope of others in practice. Let's read text. We'll see questions later. Important definition, section 2, subsection 2, members deemed to be in practice. CA will be deemed in practice if he is doing activities given in section 2, subsection 2, clause 1 to 3. Clause 4 gives power to ICA to issue list of services. Regulation 191 covers is issued under clause 4. List of management consulting service issued under clause 4. CA will be deemed to be in practice if he is doing for remuneration received or receivable, that is professional capacity. If he is doing for remuneration, that is professional capacity, deeming fiction will apply. If he is doing personal capacity work, deeming fiction will not apply. Working as an employee, it will not apply. He may be doing this work individual or in partnership, doesn't matter. Practice related activities, describing himself public accountant, deemed to be in practice. Setting up office, deemed to be in practice. Offers or offer to perform tax costing or accounting or deemed to be in practice. Then that point should have come after in 191. Service related, if you are doing job under CA firm, again deemed to be in practice, but only for limited purpose of training one article. Training one article. Correct, and not obligation. CA in service with armed forces. CA in service with armed forces, again deeming fiction will apply to maintain the ethics. Then under clause 4, list is extended. Regulation 191, you are working as executor or trustee or receiver, liquidator or administrator, arbitrator, or acting as a secretary or doing tax advisory, tax costing, finance, or acting as secretary appointed by court, central government, state government, not salary come full-time basis. If this special work is done on salary come full-time basis, deeming fiction will not get applicable. We'll see management consultancy services later.